Hello, everyone, and welcome to our Used Car Week pre-show webinar entitled The Power of Integrated Business Solutions, brought to you by DRN, MVTRAC, and SCM, along with Bridgecrest. My name is Nick Zulovich, part of the team at Cherokee Media Group, and very grateful that you've taken time out of your day, investment of time to join us today for our Used Car Week pre-show webinar, again entitled The Power of Integrated Business Solutions. And as we go through our time together today, after our presentation, if some of the content piques your interest, please use the chat function here on the Zoom platform to submit your questions, and we'll get to those inquiries after our prepared presentation, where we're pleased to welcome in two of the executives from DRN and VTRAC and SCM, Jeremiah Wheeler and Joe Farley, along with the reigning loss mitigation executive of the year, John Masiha of Bridgecrest. Gentlemen, welcome to the webinar. Thank you for the time. How are you?
Doing great, Nick. Thanks for having us. We appreciate you hosting us here.
Yeah, excited to be here. I appreciate that. I love Messiah's intro too. So
Yeah, really looking forward to this discussion. Thanks, Nick, for having us.
So we'll jump right in. I know you can see here on the slides, meet the panel. I'm Jeremiah Wheeler, president of DRN, MVTRAC, and SCM. Been in the industry since 2006 and happy to lead up a team of great individuals. And we want to dive in and talk about some of these things. Also let Joe and John introduce themselves as well.
yep, thanks, Jeremiah. Yeah, Joe Farley, so chief sales officer for DRN and VTRAC SCM. Originally with the SCM brand, recent acquisition about a year ago to the Motorola Tri brand here. So excited to talk about the power of the Tri brand with everybody on the webinar today. I've been in the industry since 2013. So.
Awesome. Thanks, Joe. I'm John Messiah. I'm the head of loss mitigation and lending operations for Bridgecrest. I've been with Bridgecrest for a little over 3 years now. And before that at Capital One and Uber and Goldman Sachs.
Thanks, guys. Appreciate that. So let's jump right in. The first thing that we want to talk about is obviously we're talking about integrated business solutions today, and I think we want to start by making sure that everyone on the webinar here understands the integrated business solutions are made up of the Tri brand, and we'll start with DRN. For those of you that aren't familiar with DRN, we are the leading data provider of LPR data and analytics, and LPR is license plate recognition technology. We scan license plates and we collect about 500 million plate reads a month nationwide in over 400 markets now. And, we help lenders and we help insurance carriers. We help them mitigate risk, avoid and identify fraud. We also help them find a lot of their assets. And as you can see here, over 2.8 million repossessions have happened due to LPR and live pickup services since 2009. And the value there has obviously exceeded over $28 billion that we've helped collect and bring back into the lending institutions that we've partnered with. We're in over 400 markets, as I stated before, and over $1 million per 1,000 units that are returned. And that obviously fluctuates with vehicle values as they go up and down, and depreciation changes over the cycles there. Let's jump to the next slide. So MVTRAC is one of the Tri brands that we're also going to dive in and talk about today. MVTRAC is what we consider internally as our automated technology shop that helps lenders find assets. We have the forwarding assignments, we have some skip assignments, but the majority of all the repossessions that we do at MVTRAC for our lending partners is through the LPR lens. And what we do is we host and stage thousands, hundreds of thousands actually, of vehicles that are being sought for repossession. And when those vehicles are scanned in the marketplace, we have the ability to to pick those up in live real time. And we also provide some skip tracing services as well, using data and analytics, obviously, to drive that successful recovery and or remediation with the client. And then lastly, and certainly not least, SCM, which is a recent acquisition for us in 2024. SCM is a very highly focused skip tracing firm. They also do some forwarding as well and some LPR staging, similar to the MVTRAC brand. But the majority of SCM's business has always been in the skip sector. They do a great job, have over 150 skip tracers, and over 50 databases that they access. We have a great tenure of employees there with a ton of domain knowledge, and we typically perform at the highest levels at the SCM brand. And we look for a lot of the older, harder to find assets, as well as specialty like boats and RVs and things of that nature. And so we're happy to dive in today and talk a little bit about the integrated business solutions using the Tri brands. And we're going to go through a couple of different products and services. But before we jump in there, I really wanted to talk a little bit about the industry as a whole and what we're seeing in the markets right now in terms of trends and the statistics. And this data has recently been updated. And so we're looking at a massive amount of outstandings in the market of $1.5 trillion. So auto debt in general stands at $1.5 trillion. And of that, you can see there it's 94 billion in leases, and the remainder is made up of loans. And that's as of June 2025. And so if you think about that, and then you look at the numbers right next to it, is 30% of those outstandings are made up of subprime or below prime loans. That has typically been the mix traditionally over the years. You'll see that fluctuate from time to time, but having a mixture of 70-30, 70 being near prime or prime, and then below prime or subprime being 30%. So in our business, on the recovery side and or collection side of the business, obviously subprime drives a significant portion of the volume that comes into our shop. And so, you know, as long as 30% is the total out of the total outstandings or the way the numbers fall, then we'll see a significant portion. But if you look at what we've seen here recently of the delinquencies, which majority of the delinquencies are associated to the subprime loans, you can kind of do the waterfall math here, and it adds up to a significant number. 7% are actually delinquent right now, and that's at some all-time highs, higher than the 2006 numbers. And so some portfolios are different. If they have a higher near prime or prime mix, some are running 5.6 to 6% delinquencies. Some are as low as 3%. If you look only in the prime sector, then you're seeing, you know, under 2%, around 1.5 to 1.8% delinquency rates. And that also depends on whether you're measuring 60 days past due or 90 days past due. And some obviously have different assignment strategies, and I think we'll probably dive into that in just a minute with John. But the quantity of repossessions year over year has grown substantially since the pandemic. And obviously we took a major dip in the pandemic when they paused and had some moratoriums, and those moratoriums were nationwide at first, and then they were sporadic in different pockets and segments of the country, but the repossessions dipped to a pretty low level. But this year is projected to be right at 3 million repossessions will happen in the United States. And that's up over about 2.8 million last year, or 2.7 million last year. And then the years prior to that, obviously, it's literal hockey stick that you see. And they will be even higher next year is what we're projecting. And so thinking about all the numbers that I just threw out there, and then looking at the used vehicle depreciation in 2025 has been around 14.8%. And it's varied depending on the age of the asset and also the brand of the vehicle. It ranges anywhere from from 17 to 30%. And so you have to take into consideration when you're thinking about your assignment strategy and how many dollars per day are you losing on asset value, and how you price that loan, and whether or not it was super subprime and you have a higher interest rate that you're waiting to collect, or a lower interest rate on the prime side. And that depreciation definitely comes into play and factors into your numbers. So let's jump in and talk for a minute with John about really what keeps lenders up at night. And I think it's a really good headline for this slide, because as I stated before, 60+ day delinquencies are around 7% in the subprime sector. And I know Ridgecrest has a different mix of business, and we're not solely focused on super subprime, but with 3 million repossessions forecasted this year, and we're looking at the highest delinquency rate since 2008, since the last recession took place. We kind of want to talk about what's keeping you up at night, John, and how you guys are focusing your efforts and your energy, and also how are you adopting and adapting to new solutions in the marketplace?
Yeah, thanks, Jeremiah. So I would say, we're definitely seeing delinquencies go up. Like I said, I've been with Bridgecrest for the last 3 years. When I started, we had a portfolio of about 17 billion, and our portfolio has grown to 26 billion. And so we're seeing volumes go up, and we're also seeing delinquencies go up. So in the repossession space, month over month and year over year, we're repossessing more cars. Today we're repossessing about 12,000 cars a month. And so that's a lot of volume, and we want to make sure, that we stop losses as quick as possible. And so when we put things out for repossession, we want to pick them up as quick as possible to help prevent some of those losses.
Thanks, John. Quick question. So obviously we're talking about integrated business solutions. So from that standpoint, what are you guys doing that you may see as different than you were 5 years ago with integrated business solutions? I know that we obviously have Bridgecrest plugged in as a client of ours in a couple of different places, but I know that it's differently viewed from your lens, looking at us as a business solutions provider, than we look obviously at the marketplace and how we approach getting that business and what we do with it when we get it. But what are you seeing that's so different from 5 years ago?
Yeah, so we're placing accounts out for repossession later, right? Also with like technology and those kinds of things, we've started text messaging customers and doing things like that to help get payments, right? But as far as like this business solution, what I can tell you is like we run a hybrid model at Bridgecrest. And so we have a direct network, and then we use forwarders, and then we also use skip vendors as well as LPR. And so with DRN, what we do is we buy the data, we use the data on our internal skip teams. And so our internal skip teams will use the data to try to help locate customers, as well as we pass the DRN hits over to our direct agents through RDN, and give them the ability to also work it on their side. And so as we know, every repossession company is a little bit different. Some are bigger, some have their own skip teams and like to work stuff themselves as well. And so our internal skip team uses the data and tries to, find the better addresses, as well as passing it to our partners out there in the field to help them with that. And then with MVTRAC, we stage all of our accounts with MVTRAC for LPR. And so, to me, when other lenders ask me, hey, are you using LPR? All of that kind of stuff, I always tell people it's a no-brainer, right? Like to me, LPR is like fishing, and you'll get extra cars automatically. And so, I always think every lender should be using, LPR. And I always tell everybody to use MVTRAC just because it's part of the Tri brand. Obviously, it has all the data, and it has the biggest number or the biggest network of agents that are connected in with DRN. And then as far as SCM, we use SCM in our forwarding space as well as our skip space. And so, they've been a great partner of ours, helping us to find those cars that are really hard to find that we can't find. SCM's been a great partner. And so, like I said, we use kind of a, mixture of direct forwarding and skip agents. And we use all three of the tri-brand. And that helps us, pick up a lot of cars. This year, the tri-brand is going to pick up over 11,000 cars for us. And then the DRN data, we all know it's valuable. I can't put necessarily a number around how much that data helps our partners, our direct partners pick up vehicles, and then also our skip team find those customers that aren't where we think they are. And so there's a bunch more recoveries that I know we can attribute to the DRN data.
Yeah, thank you, John. The way that I think about it, right, everything that you just explained, I think about it in a linear fashion, right? The life cycle of the loan and how that plays into every segment. And you guys are using a hybrid model, and there's maybe some lenders out there that are forwarding only. They don't use direct agents, and it changes the way that they sometimes assign things at the days past due. They move it in or out based on the performance. But I always think about everything linearly. And so, Joe, if you could go through a little bit of how we think about that and how our tri-brand plays into that linear fashion and helps lenders manage that end-to-end solution.
Yeah, of course. Thanks, Jeremiah. And then, John, you've mentioned a couple of things I'm going to highlight, and then we're going to come back to obviously the speed of repossessions from placement, how quick those vehicles get picked up from assignments important to you. Obviously, the influx in volume, the pressure that you're feeling on that influx in volume, and what the industry is feeling. Obviously, that's something we'll come back to. And then also using data to drive decisions, back to kind of what Jeremiah just mentioned and what you just mentioned, John, using data and leveraging data to make data-driven decisions versus just kind of shooting in the dark. And so I'm visual. I really love this end-to-end solution that kind of plays out the tri-brand and where we feel it creates the most impact for our lender partners across the country. Our biggest focus is trying to combine solutions that can solve problems and create efficiencies with each and every one of our lenders. And I think we're in a very unique, and by we, I mean the tri-brand, very unique in being able to offer solutions that really differentiate ourselves and that we can mold and customize to different parts of your business, John, specific, and any other lender that's out there. So as we look at this, DRN being the first one, that portfolio analytics and that risk scoring model, that speaks to what John had mentioned before. It's leveraging DRN data to go in there and score your portfolio early in the collection cycle. As your team looks at these assignments and work these accounts, they leverage DRN data to say, hey, this customer who may be a little sporadic in paying their account, their vehicle is always in an area that I know it should be in. It's always at their given address, or it's in a spot that I feel comfortable. We're going to work with this customer a little bit more. That could be an instance or a decision made by a lender leveraging the data, or where the inverse of that would be, we haven't been in communication with this customer at all, and we're seeing this vehicle constantly spotted across the country in an area, in a location that we have no record of. And so that would action a decision from that lender to possibly move that assignment faster into that collections process, out into the recovery process sooner, potentially. So we could do that on a grander scale. The entire portfolio can be scored. We can measure it and give you that percentage and those assignments specific that would be a higher risk. We have lenders, I believe, on this call looking at the attendee list that leverage that risk scoring model today in their portfolio early in their collection cycle, like John does, and they make those data-driven decisions that allow them to maintain, high recovery rates, or keep the customer in the car if that's the decision they decide to make, even with the influx in volume, kind of maximizing that collection process efficiency. And then the loss alerts and the active duty alerts, part of that DRN product on that early stage. I don't want to give too much away on the loss alerts. We got some slides on it later, but we are, that loss alerts product is focused on digital impound notifications, total loss notifications, exported vehicle notifications. So it's really digitizing your current internal impound process on that loss alerts product to create efficiencies around that alert notice, to speed up that alert notice and save you potential, obviously additional bailout or storage fees, up to even potential a lien loss. So we're going to go into some more detail on that loss alert. So I don't want to give too much away for that. But as we move through that collection cycle, as we move through the kind of the spectrum here, we've got that piece that John mentioned earlier, that skip trace data, leveraging both DRN license plate recognition data, tying that into consumer data and address information. SCM and MVTRAC and a lot of lenders around the country leverage this technology to maximize their recovery performance. So you're using millions and millions and millions of plate scans and tying it into consumer address data to score that address to the highest probability of recovery. And you can push that down, whether it's to a direct agent, if you're hybrid, or to a forwarder, giving that verified information with the detail behind it, saying, hey, this vehicle has been spotted here. Looks like it's an address that's associated with the family member. There's a very high probability that that vehicle is going to be there if you have somebody run out there and recover it today. So really, using data and creating some actionable decisions behind it. And then as we move through that process and go into the actual recovery piece of it, highlighting the MVTRAC, fully automated, large LPR and smart assign process that they've built out. MVTRAC is going to, they pick up over 20,000 repossessions on a monthly basis, by far the largest front-end repossession management provider in the industry. And over 90% of those are picked up without any human intervention. So as we look at maximizing efficiency, as we go back to talking to John later about the speed of the recovery from assignment to that agent actually securing that asset, leveraging technology and utilizing a partner that can pick up an assignment without human intervention as quickly as humanly possible, being able to use both, RPA plus cognitive overlay. There's a lot of technology, systems that are out there that we've been able to integrate into our system within MVTRAC that allows us to put the best address out there and select the best agent out there to recover that asset. And so there's a couple of technology slides later that we'll go into that we're leveraging to create some more efficiencies for our lenders. But from that front end assignment piece, MVTRAC's really kind of stolen the show in terms of overall efficiencies and definitely in terms of total recovery volumes for the industry. And then SCM, I like to call it the safety net solution. It's late stage recovery, deep skip tracing. We've got an unbelievable team of over 150 skip tracers that do nothing but hit the phones and hit the databases to locate assets that our lenders have felt have just completely vanished or gone, and they've got nowhere else to turn. And so we've been able to build a product around that, saying, hey, give us that last shot. Let us be that safety net. Let us recover that asset that you think isn't there anymore. And we've picked up over 50,000 assignments through that SCM brand for accounts that were 3 to 350 days past due or even older. And I'm going to come back to a little memory for John when he was at Capital One. He decided to kick off a real deep skip tracing program. John, I think it was, correct me if I'm wrong, I think it was like 470 days past due or older, and said, I don't think we're going to just throw these at you. In the first month, we picked up 100 of them. And so leveraging that technology, leveraging that team, having the opportunity to be able to perform, and having a good partner in terms of lenders giving us the opportunity to do what we do best, definitely makes a difference. So in this full spectrum, that's what it looks like when lenders decide to leverage the full brand and maximize their efficiencies internally. Next slide.
Yeah, let's go to the next slide, and we'll just show some real world impacts here from a lender's perspective. John, you want to talk to this for just a quick second? What you guys are seeing?
Yeah, like I said, the tri-brand's picking up a lot of cars for us, about 9% of our repossessions, probably about 6% with MVTRAC and 3% with SCM of our overall repossessions. So like of what we give them of our total volume, we're seeing that the tri-brand's picking up 9%, which is honestly a lot when we're doing 12,000 repossessions a month, and we're going to do about 140,000 this year. And so that's a lot of cars.
Yes, absolutely. And what we've seen too, we were just talking about it yesterday in a meeting, that on the DRN side of the business, obviously we have created more linear operating groups within the business because, we have 3 different brands. They are 3 separate operations. However, we saw some efficiencies to be gained by merging a couple of different groups within the organizations. One, obviously, that made the most sense was vendor management and compliance management. And so everything external facing to the vendors, we wanted to be in one singular group and make sure that we're speaking the language across all three brands. And we don't have three separate brands hitting the vendors and asking them for information and/or trying to manage three books of compliance and insurance docs and all of that. But we've seen an increase in overall performance. And over the last few years, we've actually seen a decrease in the number of agencies that DRN has in the network. But we've gone from 300 million scans a month to over 500 million scans a month. And our network is getting stronger and getting larger in terms of just data in the market and number of kits in the market. And so our large agencies in that number are growing. We were over 700 agencies in the DRN network just a few years ago, and we've managed to get that to a more manageable level. And that's actually driven higher performance on the MVTRAC and SCM brands as well, because the more data obviously that's produced, as long as we help our vendors stay strong in terms of their scan density, and we're not oversaturating markets with new vendors and too many camera systems in a network or in a market, then it drives higher performance, and that scan to pickup ratio rises. So let's jump in and talk a little bit about where
Hey,
the
Jeremiah,
industry
real
is headed.
quick,
Yes, sir.
before you go there, I would say it's also interesting because, like, now that there's the tri-brand, right, it also makes it less relationships for the lenders to manage. Because, if you use all three, before it's three relationships, now it's one. So it also makes it easier for the lender, because now you have one relationship to manage instead of three.
Yeah, good point. Thanks for bringing that up.
Yep.
So, Joe, tell us where the industry's headed.
Oh, that's perfect. What a great
Yeah.
question. As I was thinking about this, I thought back to a big client event that we held last week, and there were over 35 lenders there. And I love getting together, whether it's Used Car Week, which I'm very excited about, Nick, largest industry event in the country for us, and being able to get in front of those, or an event like we put on last week, where we're able to get in front of a bunch of lenders and collaborate with them and talk to them, and other partners that can provide data to us and let us know, hey, what have we seen this year? What does that look like moving forward? And then what are the changes or impacts that we can make to really drive efficiencies and create some. I just like to think of it as making your life easier. And so RDN had presented some data last week, and we mentioned it here a couple of times, that this year there's going to be 3 million repossessions. Next year, it's definitely going to increase. To what level? We can't specifically say, but we know it's going to increase. It's been like that for the last few years. You mentioned the hockey stick, in regards to the graph chart of how we've looked the last few years and where we're going. But with all that volume, and John can speak to this as a lender here in a little bit, but with all that volume, comes a lot of pressure. And when I think of pressure, I think of that creating an environment that's ripe for innovation. It really opens up opportunities for us as we collaborate, as we get together to figure out, and especially a unique position for us as the tri-brand, with all of the lenders that we do service, to figure out what is next, what's ahead, what can we do, and what can we focus our energies towards, to making our partners' lives easier. And I bucket partners into two buckets. Our agent partners, which are the lifeline and the blood of our business. What efficiencies can we create for them? What can we do that's different? What can we implement that makes their lives easier? The merger and a combination of our vendor management, solutions across the brands, doing things like that makes their lives easier, to create a one-point contact, similar to what John had mentioned. And then the other side of that coin, and the other bucket, is lenders. What can we do for them? What is their pain point when we talk to them at these conferences or when we're at these events? What innovation can we drive together as an organization, that they unfortunately at times don't have the ability to. And John can attest, as much as they want to move like a speedboat, they move like a cruise ship. And so they're looking for outsourced services, and they're looking for opportunities for vendors like us to be able to provide new innovative ideas. And that comes to this product that I'm going to mention, which is MVR, and it ties back to the loss alerts piece. So if we jump to the next slide, this is an innovation that we have created that was built around the pressure of volume that has flooded our industry, and specifically the volume of impounded vehicles, the volume of impound notifications that these lenders are getting. A lot of those notices still being very manual, still very people heavy. And so we leverage the technology that we already have. We are coming out with, we did come out with an announcement on our expansion of our loss alerts product and the new partnership with Lonebridge. If you're interested, next we got a podcast coming out before Used Car Week talking about that partnership with Loss Alerts, Lonebridge, and how it relates to the MVR product. So I recommend you guys listen to that podcast. There's some exciting stuff, and we have the team from Lonebridge in for that. But this product is going to replace ideally the ancient process of normal run-of-the-mill paper notification, internal processing of impound procedures for lenders nationwide. And we've got quite a few lenders on this already. So if I break it down, MVR stands for Monitor, Verify, Recover. We felt like the industry didn't have enough acronyms, so we thought we'd throw one more at it. And so Monitor being the actual loss alerts piece now that's integrated with Lonebridge that allows us to monitor your entire portfolio from day 0 to day 1,000. It doesn't matter. We want to monitor everything. We're doing that today again with a few lenders, and every single alert that comes in on average from feedback with lenders saves them almost 2 weeks of turnaround time versus the normal paper process. So our job, our goal is to eventually eliminate the paper process altogether, but we're doing a pretty solid job of cutting that down 50, 60, 70, 80%, depending on the lender, of digital notifications that we provide them versus the paper notifications. So we're saving them time and money in terms of those notifications coming in. So we're monitoring the notifications for them. We're getting those alerts. Our team is then calling, verifying the information. We're getting the documentation. We're getting the fees. We're getting everything that we need to be able to recover that asset. We're also getting the condition of that asset. And we've partnered with a really good third-party company that will do field services work for us. They got an actual appraisal company that will go out there and do a full-blown 13-page, 50-point appraisal on that actual vehicle. And so it'll break down the actual cost of the damages by line item. It'll tell you the repair cost plus the labor. It'll tell you the actual the value of that with the damages included. So then you can, as a lender, leverage all of that information, actionable data that we provide you, and see if it's worth recovery. And so that's the monitor and the verify piece of it. We bundle all that together. It's like Christmas time, but early. Send it over to you. You decide if you want that picked up, and then we can then, through the tri-brand, pick up that asset for you. We can front the fees. We can recover the asset if you want us to, depending on the lender. And if you need the connections, we can also transport and we can remarket. And so it's truly an end-to-end solution that was born out of the pressure and out of the necessity of lenders looking for an outsourced option to help mitigate this influx of impound notifications and truly and when we talk to these lenders, like, hey, we can't get to these fast enough. We're losing liens, fees are becoming astronomical. We're having to abandon a bunch of units. So this stepping in that place is saving lenders tens of thousands of dollars. It's saving them potential lien losses, and it's allowing them to pick up more assets than they would have historically done in the past. So
and Joe, I want to add to that too. So if you think about it, you break it down, obviously we did in the 3 sections here, right? Monitor, verify, recover. And we have traditionally, everyone in the recovery business knows we have impounded units and we have to find them, we have to pick them up, or when we do find them, we send agents out to pick them up, and we're fronting fees. Sometimes the agents in the field are fronting the fees directly. And in some cases, we get a vehicle after we've paid them because they won't let us through the gate. We pay them the money and we drag out a burnt to the crisp vehicle with no, it has nothing left on it. It's literally burnt, or it's missing the tires and wheels, or it's missing the seats inside and doesn't have a rear window and the mirrors are gone. And in a lot of cases, the lender looks at us and says, why did you pick this unit up? You know, we could have abandoned it and taken a different path. And now that you've picked it up, now we have to record it. And so somebody needs to pay for it. You know, you got to file an insurance claim, or, you know, it's an issue for both the forwarder in this situation and an issue for the direct agent, whether they get it direct or whether we get it through us. We're both on the hook for trying to figure out what to do with this, you know, shell of a car that we just picked up. And so that appraisal process comes into play in the middle, where we're telling you the car is in an impound. We can't see it. We can't get through the gate to go take a look at it. Those appraisers, they let right through the door because they say, I'm here to do an appraisal on a unit and take a few pictures, and then they're back out. We've had conversations with both agents and appraisers, and there's usually a different story. They typically will let the appraisers through the gate and go do their job, take the pictures, get the condition report, and do all that and come back out. And then the lender can make a data-driven, educated decision on whether or not they want that car picked up and bailed out based on the bailout amount, the fees, all of that we've already gathered in the original start of the process when we first got that notification. So there's some automated process that takes place in there as well. But at the end of the day, we saw a need on one side of the equation with the impounded units and that process of recovering impounded units. And we said, well, we already get all this impound data for these lenders, so why not just marry all three together? And we figure out the right flow, and we added the appraisal process in the middle. And so for the lenders that are using it, it's working really, really well. And it's taken a lot of weight off the internal solutions and the internal people that are having to verify all of this documentation, make the phone calls themselves. And so the lender, they're able to repurpose people inside their institutions to other job roles because they've managed to outsource this, and it fits into that segment. We may already be monitoring your portfolio as a lender, and we may also be doing your impound recoveries spotty here or there. Let us do it all, and we add the appraisal process to it for you. And so it's a really great product. I don't know, John, if you have any comments or anything to add to that before we move on to the next slide.
Yeah, I mean, we don't currently use the product, so I can't necessarily speak exactly on the product, but it definitely sounds like it solves a lot of issues that lenders have with impounds.
What would it solve for you? Like, just think about it, right? If we took all of that off your plate, how would you repurpose assets and resources internally? I mean, is that something that would be beneficial to your organization?
Yeah, I think it's not, I mean, that's one part of it, right? Like the people part. I think the big part is even today on our impounds, about 20% of them we lose money on, right? So like I think the verify part of this is really interesting, right? Because that's the part where like we go back and forth with the impound lots, and you know, like you said, sometimes they won't actually give us the information on the vehicle. And so based on whatever we have to make a decision whether to pick it up or not. And then we'll send somebody out to go get it. And to your point earlier, without the verify part, like if we send somebody out to go get it, they go get it, right? And so it's like, yeah, pay $6 grand to get this car, and then they get the car, and then afterwards we're like, oh man, that car's in pretty bad shape, and we end up losing money on those. So I do think the verify part, I mean, all of the parts are obviously important, but the verify part here, I think is a really good step, because this is where I know lenders lose a lot in this process. As far as the monitoring piece, you know, I also agree, like there is, you know, I have, I think 4 or 5 people that they just open mail. And we do get loss alerts, you know, digitally, but we still have 4 or 5 people opening mail. So, you know, from that standpoint, I do see, you know, the ability to maybe get a FTE, some FTE saves on the monitoring part. But the verify part, I think is the part that everybody's kind of missing right now. You know, either the lender themselves is making the decision, or they have a partner that's making that decision. But you know, at the point of pickup, nobody's like stopping that from happening.
Yeah, that's good. Thank you, John.
Yeah, thank you, John.
Yep.
So, yeah, so smart sign. So I was talking earlier about, make sure I'm not on mute. I was talking earlier about innovation, technology. John had mentioned earlier about the speed of the recovery being important. And we've heard that a lot from lenders around the country. Hey, volume's increasing. We want to know two things. One, can you still manage the portfolio if that portfolio increases 30%, 40%, 50%? Now, by managing, I mean, can you also maintain a low days to recover? Like those two things are important to us. We want to know you can manage the workload, but we also want to make sure that you can maintain a certain days to recover. As John mentioned before, that's a huge metric that they measure on most of our scorecards for most of our lenders. That's a metric that they measure. They're watching that extremely close. So the innovative, we talked about MVTRAC and how 90% of their repossessions are done without human intervention. A lot of that was built out due to that necessity of being able to manage that influx of additional volume, while also at the same time, push down on that days to recover. How can we handle that net new volume? How can we manage that, but then also ensure that we're getting the agents the best information at the right time as fast as humanly possible? So through the combination, obviously, of some really good web developers and some automated processes put in place and some cognitive overlay that actually does address scoring across multiple different databases to pull the best address, and then leveraging that skip trace product within DRN built into that entire assignment flow, the system is able to pick the best address and then score and pick the best recovery agent in that area available for that client and assign them in real time. So there's very limited, if any, friction, delay, or hands-on touch notification needed between the assignment from the lender and then down to the agent all the way to recovery. And so that's the necessity and the growth and leveraging technology, being able to implement that to lift recoveries has been important. And so, obviously we're leveraging the relationships and the data and the technology that we have to meet both of those metrics here. And this is the one great thing, and our vendor management team does a phenomenal job. We've got a great agent advisory board. We get a ton of positive feedback and negative feedback. We take it both, and take it back home and build products and services around both of them. They do a phenomenal job of communicating with our agents, finding out what their wants and their needs are, finding the pain points that they have while they're out in the field trying to recover assets. So we talked about both, obviously, in VTRAC and SCM, leveraging live LPR technology for repossession as a repossession strategy. John had mentioned leveraging that within his portfolio as well. One of the largest pain points for agents out in the field is, hey, I'm out there, I scan a vehicle, I'm ready to recover it, but I have to wait. I have to pick up the phone. I have to make a phone call. There's a delay in getting that assignment out to me. And it creates a couple of issues. It could potentially create the issue of them not recovering that assignment. They're just not willing to sit there and wait for the assignment to come over to them. It creates the issue of that customer coming out, getting in the vehicle and driving off. But it also creates a compliance issue if there's a potential for a breach of peace or interaction that wouldn't be a pleasant interaction potentially with the consumer and the agent. And we want to prevent all of that. And so leveraging technology, working with our team in collaboration with our agents and DRN's technology to be able to create a fully automated live LPR real-time recovery process. So when an agent goes out there, scans the vehicle, they're not waiting on anybody. The background then works. It checks the lender's system of record, ensures the assignment's still open for repossession and eligible for recovery. It double checks the internal system of MVTRAC or SCM to make sure there's no flags preventing that repossession from occurring. And then it pushes that assignment out to the agent in the system of record required by the lender for them to recover that asset and then report it in real time. So tens of thousands, hundreds of thousands on an annual basis, repossessions done by LPR without any intervention, all under a minute's time. And so it's again leveraging technology, working with our partners, creating new innovative ways to drive faster repossessions, more compliant repossessions for our agent partners and for our lenders out in the field. And so as we kind of wrap this up, and John, I'd love some love some feedback, kind of from you on what you've seen, some new innovative products, some new efficiencies in the market that you've talked to or tried out, or some things that you're looking forward to in the future that you feel, hey, look, this is something that we either are looking at implementing. This is something we'd really like to have. Any kind of feedback from you on what that looks like, kind of going forward for whether it's integrations with new platforms or new efficiencies that are going to be implemented within the organization.
Yeah, I would say, from a lender's perspective and, recently been doing a lot of demos and talking to a lot of our partners. Um, AI is obviously a big thing, and we're looking at all kinds of AI tools out there to help us, be more efficient, help with integrations, and then to Jeremiah's point earlier about FTE cost. And so, we're looking at all those things. I think AI is kind of changing the world that we work in. And so it's going to be really interesting the next few years how everybody implements some of that. And then again, as far as the tri-brand, it's a great partner to have. I would recommend it to any lender out there. From the DRN product, being able to monitor your portfolio, get the data on where vehicles actually are, being able to use that, whether you have a direct model or a forwarding model, it's beneficial in both. And then, partnering with MVTRAC as far as, giving them your LPR assignments. They have the biggest network of LPR agents out there. And so to me, LPR has always been, like I said earlier, fishing. And so, the customer has to get lucky every day. You just have to get lucky once. And so, if you get that LPR hit, that car gets picked up. And so, MVTRAC is a great partner there. And then with the difficult to find vehicles, SCM and their skip tracing and those tools. And, um, the to me, I've been in the industry for a while now. The phone is still the best skip tool out there. I know less and less people are picking up the phone, but the phone is a great tool that I know SCM definitely utilizes. And then, customer data is getting more and more available online, whether they're, on these social media platforms and all of those kinds of things. And so I definitely see, AI jumping into some of those areas. And I know SCM does a lot of stuff with the digital skip as well. I know we kind of didn't talk about that here, but I know you guys use digital skip tools to also help your skip agents locate vehicles. And so I think all those kinds of things are super beneficial to lenders out there.
Yeah, no, I agree. And I think one thing's for certain. I think the pressure of volume, the pressure to perform, both of those will remain for the foreseeable future. I don't see that slowing down. And so with that, like I mentioned earlier, it's going to continue to keep the environment, and it's going to continue to keep our focus within the Tri brand, ripe for innovation and to develop new products, to develop new services, to launch new solutions that are going to help maximize efficiencies like the MVR product. And so we're excited about the future announcements that we have coming up. I think we've got a really good roadmap of where we want to go based off of feedback that we get, thankfully, from good partners like yourself, John, and all of our great agency partners out in the field. And so we take that and we learn from it, and we build and we try to create solutions that ideally work for everybody. So we're excited about what the future has to bring. So anything else from you, Jeremiah?
No, I think all of the points that we've covered today. I'm looking forward to hearing about Used Car Week this year. Obviously, I'm not able to make it, and I know you guys are looking forward to being there. And I know many of you on the webinar here are attending. It's over, I think, over 1,500 people will gather in Las Vegas for Used Car Week this year. I'm unable to make it for the first time in 14 years, but I have a lot happier things to celebrate. Fortunately for me this year, my oldest daughter's getting married. So, but we wanted to share with everybody a little bit, really a lot of what's going on at Used Car Week. Our team will be there in full force with over 20 attendees just from our Tri brands. And we have a lot of great sessions, and you can see them here. You can also scan the QR code there on your screen to book a one-on-one meeting with some of our team members. Our booth will be the biggest it's ever been at Used Car Week. I'm super bummed that I'm not going to see that awesome booth build that our marketing team has worked so hard to do, but I've seen renderings and it looks great. I'm looking forward to seeing some videos and pictures there. But we have sessions on Monday where Ryan Medina is going to talk about cutting keys with some agencies, as well as you, John, on that panel, cutting costs, maximizing efficiency at the lot. So it's really more about how do we add more revenue streams to our agency partners out there in the market and make sure that we're doing it the right way and make sure that we are maximizing dollars for our agents in the field. And then Joe's going to talk welcome remarks on Monday as well. And then Tuesday, we actually have 3 sessions where some of our team members are partnering up. We have Joe Farley and Mike Villanova will be with Ann Holtzman and Jeff Marsh from Ann from Allied Solutions and Jeff from Millennium Capital, talking about maximizing collateral recovery. And then we have Adam Fader and Sam Van Scoik, Damian English from Navy Federal, Andrew Villarreal and Dion Cage from Exeter, talking about the hidden cost of delayed recoveries. So all of these sessions are really absolutely must attend sessions for sure. And then last but not least, we'll have Courtney Osborne from our team teamed up with John Sibbett from RDN to talk about the recovery lens practices and innovations in 2025 and beyond. And I know John Sibbett is armed with a ton of data, like we covered in our event last week in Pinehurst, North Carolina. And we talked about it earlier, 3 million repossessions this year, more repossessions coming next year. I think delinquencies and the consumer erosion is continuing to happen. But let's jump to the next slide and see if we can get some Q&A going.
Great presentation, gentlemen. Again, thank you so much for being part of our Used Car Week pre-show webinar with Jeremiah Wheeler and Joe Farley of DRN and MVTRAC and SCM, as well as John Messiah of Bridgecrest. And in the closing moments that we have here, if you have any questions for these gentlemen, please use the chat function here on the Zoom platform. And gentlemen, we'll touch on a couple of things that wanted to ask you all about in our closing moments here. John Messiah, we'll start with you. The case of human nature that sometimes change can be difficult, but what advice and recommendations might you give a fellow finance company, lending institution who might be hesitant to change their current vendor structure? What suggestions might you offer as far as how to evaluate and perhaps proceed?
Yeah, I think it's always hard to make changes, and a lot of times, I've worked at a few different lenders now. There's a lot of pressure internally, and you need to be able to explain why you're making those decisions, right? And so I would say, talk to other lenders, ask them for data, ask them for, results, because everybody's data driven these days, and so you want to get the perspective of peers in the industry. So ask peers in the industry like myself, and I'm happy to discuss anything anybody wants to talk about. But I also think, talk to the partners that you're looking at, right? And so if you're looking at the tri-brand, like talk to Joe and Jeremiah and Courtney and find out, like, can you give me some data about companies that are similar to mine? How are they performing? And then that way they can be armed to go back to their analytics teams and their leadership teams to be able to make those kinds of decisions. Because a lot of times it's, we all represent our brands and we have those relationships and we talk, but it's also hard to make moves without any kind of data or something to back it up. And so that would be what I would recommend. Talk to some peers in the industry, get some data to help back up your decision making.
Excellent. Well, along those lines, either Jeremiah or Joe, if either one of you or both of you would like to address the question of why the experience that John and Bridgecrest has had thus far is repeatable at other shops and finance companies. Why is any client that might choose to work with y'all set up for success?
I always like to start from the boots on the ground. Without the agents in the market and the agents in the network, and us taking great care of our agents and partnering really strongly with those agents, the results wouldn't be there. And we could only go so far to gather enough data to find out where the car is. But we're simply a middleman. We're in the forwarding space, and we have no assets to go pick up those units. We have no tow trucks, and so I like to think about it internally and focus our team internally on making sure that we're doing right by the agents, and we have a great, strong working relationship. One is, on the SCM side of the business, we pay our agents as soon as 24 hours after the recovery occurs. And so we know that cash flow is important in our business, and these guys are putting a lot of fuel on the streets, people, assets, tow trucks. I mean, a rollback's, $120,000, $130,000, some $200,000, and they're running all these units. And so it's up to us to make sure that we have a strong working relationship, and we make or break ourselves in that arena first and foremost. And so the repeatable process, though, to answer the original the question is we have scalability internally because of our systems. We have over 15 engineers that work tirelessly to keep our systems running and to continue to build new and fresh things around automation, like case claim and smart assign and other things. And so we've already started building and implementing a lot of additional tools on the SCM brand as well since acquisition in July of 2024. And we're sharing some of the great things that they brought to the table with the MVTRAC brand. So it's really, I'm not going to call it as simple as plug and play, but it's pretty dang close to as plug and play as you can get in terms of a lender coming over and plugging their portfolio into our process, and we take it and run with it.
And I'll let go onto that. It's also it's taking care of our agents first and foremost. On top of that, it's relationship and trust. It's sitting across the table from the people you want to do business with. It's telling them something that you're going to do, and then it's actually going back and operating and executing that. And to the point where they've taken a leap of faith to sign you up and partner with you and build a relationship with you, and people in their office and their organization are trusting that they're making the right decision. And so that responsibility lies with you. And so if you're bringing that back to your operations and you're carrying that same attitude with your team and you're executing on the level that you promised you would, that builds trust. I can tell you the very first time I ever met John, for instance, we had a 6-hour lunch. We didn't build trust on that 6-hour lunch, but I can promise you the foundation was built there. And then 13 years later, the trust came, the relationship was built, the business was won and earned. But on the foundation of that relationship trust, but then also taking care, like Jeremiah said, of all the partners that take care of you every single day.
Very good. Again, our closing moments here on our Used Car Week pre-show webinar, The Power of Integrated Business Solutions, with Jeremiah Wheeler and Joe Farley of DRN, MVTRAC, and SCM, and John Messiah of Bridgecrest. And there on the screen is their respective contact informations to reach out to them directly. And as mentioned, DRN, MVTRAC, and SCM will have a significant presence at Used Car Week. And if you haven't already made arrangements to join us beginning on November 17th at the Red Rock Resort in Las Vegas, just go to our conference website at usedcarweek.biz. And to finish out our time, gentlemen, John, we'll go back to you, and then Joe and Jeremiah will have the final word. Just any closing point you'd like to make or observation about the current state of the industry, or looking ahead, just A final thought that you'd like to leave to finish our time today. So John, we'll go back to you, and then Joe, and then Jeremiah to finish us out.
Yeah, I'd just say, it's really exciting times we live in and what we're doing. There's a lot of changes coming and, you got to be able to scale and be ready for what's coming. We're seeing a lot of growth and we're seeing a lot of, a lot more work and we need to make sure that we can scale with the work. And so, really excited about the future and what's going on and excited to see everybody at Used Car Week.
Yep. Thanks, John. Yeah, I'm excited about this time in the industry as well. I think there's like I mentioned earlier, there's a lot of pressure on everybody, but I think we thrive best under pressure. And so I'm excited about what's to come. I'm excited about the new innovations that we can develop together as a team, and I'm definitely blessed for the relationships like John that we have in the industry that allow us to create these innovations and implement it within their own internal operations. So excited about Used Car Week. We're gonna miss Jeremiah. I nobody missed the opening remarks. I've got something super special planned around that. Can't tell Jeremiah what it is, but you definitely don't want to miss it.
I'm afraid to see that.
I'm even more
Well,
excited now.
yeah, I know. I'm nervous. So I'll leave everybody with this. I'm definitely excited about the future of the industry, and not just because of what we're doing. I'm excited to see what everybody else is doing too. I mean, there are a lot of people putting in a lot of effort in this industry right now and developing really good tools, good software solutions. I mean, we've seen a few pop up over the last couple of years where agents are getting involved in building their own solutions to make their businesses better. And I will tell you too, direct agents are getting better every day, more compliant. They're joining and starting state trade associations. They're getting involved. They're serving on committees. I mean, they're putting in a ton of work. And I just want to say kudos to all of our agents out there who are kicking ass. And it makes me proud to see the industry and how far it's come in the last 10 years and how much we've evolved as a unit and as a team. And I think everybody preached unity for a long time in this industry, and we've seen it over the past 5 to 10 years where people are coming together and doing great things. The last thing I'll say is make sure that if you are in the market and you're able to support a state trade association and also support the Recovery Agent Benefit Fund, the RABF, because those guys are taking care of a lot of repo agents that get hurt or injured in the line of duty. And so we try our best to support them. We volunteer, we give money, we do what we have to do. And I think everybody should do the same. So thanks again, everybody, for joining us. We look forward to seeing you somewhere down the road. I will not be at Used Car Week, but I'm anxious to see what Joe has in store.
Well,
Me too.
well said all around. That's Jeremiah Wheeler and Joe Farley of DRN and MVTRAC and SCM, as well as John Messiah of Bridgecrest. Gentlemen, thank you so much again for the time today and each of your partnerships and relationships with us at Cherokee Media Group and Used Car Week. Thank you again, gentlemen.
Thank you.
Thank you.
See you guys.
And again, on behalf of all of us at Cherokee Media Group, we thank you so much for joining us, and we look forward to having you again next time.